sitting there thinking, oh no, he's going to give it one of the girls. What's up?
So I think most people have probably heard about the term. I think what it is a transformational technology in the way that our financial system deals with the transfer of value or information in a decentralized and distributed manner. As we know, most of our money in the world, in rands in South Africa, 95% of our money or our rands is digital. And those rands reside on balance sheets of particular banks on their particular systems. And every time that they need to transfer between different institutions, there need to be intermediaries involved, whether it's the Reserve Bank or if it's the bank itself, to actually transfer value on those ledgers or across ledgers. And so what this technology does, it says, well, there's a lot of reconciliation that's involved in those processes. Sometimes it can take, several days to transfer. And so this technology is just saying, well, actually, can't we bring all these ledgers together and use a single ledger so that the transfer of value can be quick? And it's the first time in human history that institutions can have access to a single ledger where different participants have control over different parts of the ledger. That's extremely, extremely important to understand, and that's what allows it to function.
Different parties have control over different parts of the ledger.
Of the same ledger.
Why is that so important?
So if you think about how money is transferred today, if you do what's called an honest transaction, that many of us would know about, if I send, say, from FNB to FNB, then that value transfers pretty much instantaneously because it's on FNB's ledger. But whenever I want to send it from FNB to another bank, then we need to go through the national payment system, and that's not just a ledger entry. It's ledger entries on multiple different ledgers to make sure the transfer goes through. So the reason that it's important is that you're bringing the benefits of a single ledger to a distributed participant base.
So you control your ledger, I control my ledger, we both have the same entries, the ledgers are identical.
So our ledgers are the same, but different parts of the ledger are attributable to you and me. So let's make it practical. You say have 100 units on this ledger, and I have 200 units or 50 units on the ledger. Now the only way for the ledger to be updated is on my side of the ledger, where it says that my units are there. Only I can update that through cryptography, through the use of what's called a private key, to prove to the network of participants that those are my units and I can transfer them. You, by virtue of the fact that you do not have access to my private key, cannot interfere with that transaction at all.
Kelly, what's your take on this?
I see it as a very simple solution, and a very eloquent way of rounding it up is saying, what I see, you see. There's no third parties, it's very transparent and it's very clear in terms of where things go along the journey, so it's very traceable if you have the different keys that are relevant and applicable to the different transactions. But it is essentially distributed ledger. People get very confused and very caught up in the whole cryptology of it and the hashing and the nodes and the whole way it works. And when the internet first came out, we didn't really look at and question, how does the internet actually work? We asked, what can the internet do for us? And I think because the internet has done so much for us, we're thinking, okay, cool, let's understand it a little bit more. And I think a lot of people should rather actually be looking at what it can do for us rather than how it really works. So it can be very easy to go down the rabbit hole of the technology, but for me that's not the value, and that's not a part of what I do and the value I bring.
What then are the implications of this distributed ledger for something like a straight or Johannesburg Stock Exchange, or for banks? How many bankers in the room today? What are the implications of this, Tanya?
So Chris, there's huge implications really for I think the financial markets as a whole. And the rhetoric about a year ago now was very much about disintermediation of the banks, of the role that an organisation like Straight can play as a trusted third party. And I think that conversation has changed quite a lot. We heard from some of the other panels this morning that this fear around disruption has changed in the blockchain space, to realise that there's huge potential for those businesses to actually get involved in it and actually, there's more opportunities sometimes for them. But at the same time, all of us need to be aware that this industry is changing so quickly, and I think we'll touch on something a bit later called initial coin offerings in our discussion, that this industry is changing so quickly that we sort of have this hype of we're going to be disrupted, then we calm down and we figure out what our role is, and all of a sudden a new trend comes along and you think, oh dear, now what? And so it's really an up and down and a very, very exciting place to be. And for an organisation like Straight, we put a lot of time and effort in determining what our future role is in this environment.
So give me some examples of how it might be used. In the latest edition of the magazine Acumen, which I punted earlier, interview with Monica, who has called it blockchain bigger than the internet. It will be bigger than the internet. Is that hyperbole from an outspoken CEO, or is that true?
That wasn't her. No, I think that's a very valid point. So obviously, when you say bigger than the internet, it depends upon the internet. Without the internet, this technology cannot work. But I think the point is very well taken, that its implications for society are huge. If we think about the fact that 20 years ago, most banks didn't have an online banking platform, right? And how that's changed our lives. It's unthinkable for most people in this room not to be able to just get on their phone and send some value, although it takes a little bit of time. When you think about this technology, it will transform many, many of our business models, micropayments. There are just so many things that it can do. So I don't think it's hyperbole at all. I think we're at the beginning of a huge paradigm shift. And during paradigm shifts, very few people can actually anticipate the tremendous change that will take place. We are at that threshold now.
Have you noticed, by the way, that it's only at conferences that paradigm shifts take place? I'm kidding.
It's happening outside there.
I said I'm kidding. Give me some examples of the paradigm shift. Where would I use this apart from bank to bank?
So I think the whole example of driverless cars came up, and I see it blockchain or distributed ledger technology. If we're going to be correct about the terminology.
Should we agree to call it blockchain?
Yes, thank you. Is that it's going to become a key enabler for all the new technologies and the new disruption that's going to come up. Then it's going to create that evolution of change, and it's going to create a lot faster. So, for example, the example of driverless cars, you're going to have smart contracts that will take a driverless car. If it isn't occupying a human, it's going to go fill itself up with petrol. It's going to pay the petrol station. There's going to be a transaction that's automated by a smart contract underlined by distributed ledger technology, and then it's going to go on and pick up the next person if you own one, and it goes on. So it's almost like an Uber, but without the driver and without the rating. And
without the metered taxi drivers at the Gauw train.
Exactly.
They will have their own kind of blockchain, no doubt. One of the examples that I've come across is in healthcare. I would be able to carry with me all my health records from birth. Tanya.
Yeah, there's lots of applications, and the technology originally started talking in the financial market space, but it's really now extended to every industry. So in the healthcare space, it would be something around the ability to have your health records. You would have control over those. And in what Fazan referred to as private keys, you would be able to give access to any health professional that you saw. But essentially, it would be the distribution and the sharing of information in that area, anything from your radiology results to your blood results. And then from that, it connects into other technology to say, how do we collect data from there, and how can that feed into other things like artificial intelligence or pharmaceutical developments or anything like that. So it's very often the data that might come out of blockchain that has huge potential.
So as well as my medical records, I might have my workouts and my running history and my injuries and is there a danger that this little box, my personal blockchain, I can call it that, actually becomes me? It takes over me. It knows more about me than I know about me.
I don't think that I think that goes more a bit down the artificial intelligence sort of road. But
they start to come together, don't they?
Yeah, they do. And blockchain for me is essentially keeping this ledger of assets. So in the utopia view, how it would look is that every single asset that you would have in one place, as opposed to having a title deed sitting at the deeds office for your house and your medical record sitting in the file at the doctor and the record of your car or your shares or your money. Essentially, it's keeping a ledger and a database of what assets you have, and it enables this peer-to-peer environment where you can exchange those assets with another person in near instantaneous time, in very simplistic terms.
nice choice of phrase, the utopia of you. Utopia, it's a long way in the future, or is it happening outside? That's what Azam said. Is it happening outside for that?
It's happening right now.
So it's not a utopia.
Let me just give you an example. So we talked about Bitcoin. So a friend of mine is in Silicon Valley right now. He owes me 100 Rand. So he said, oh, Farzan, I forgot to pay you. Can I just pay you with Bitcoin? So with pleasure. He said, what's your address? SMS in my address. WhatsApp him actually. Literally a few seconds later, he says, cool, just sent. I look on my wallet, I see it's come through, it's processing, and then within 10 minutes it's confirmed. Now that transfer of value that took place without a single financial institution being involved across borders, quickly and cheaply, for 100 rands. Right? That's unthinkable for most financial institutions. So the point is, this is not utopia, and it's not just financial services. It's calling us to redefine the entire paradigm of how society works. Because right now, if I have physical cash, that's the only way we can do peer-to-peer outside of these cryptocurrencies right now. Right? That's limited by the physical proximity of somebody else. Right? But now if I have an asset that works like physical cash, but it's as transportable and portable as anything digital, like an email or an attachment, that starts calling into question our current regulatory paradigms, our current banking paradigm, our social paradigms, even the very notion of the nation state starts being called into question. So these are very big questions that we have to ask ourselves and figure out, are we ready for this? And there will be a lot of disruptive kind of discussions and difficulties as we navigate through this quagmire.
Wasn't my imagination, or did I hear an undertone of uncertainty? The Deputy Governor of the Reserve Bank this morning about all of this. He wasn't quite on board, if I can use that phrase. Kelly?
Yeah, and I don't blame him. It is a new technology, and the point did come up that it evolves and it changes at such a rate that it's difficult for them to regulate because they'd have to review it at every stage. But the thing is that in order for us to embrace this technology and to get all the value and the benefit from it, is that we do need them to come on the journey with us. The conversation and the topic of collaboration has come up a lot today, and it is the key in unlocking this technology on the scale that we want it to look at. And it's going to come. It's not a question of if, it's a question of when. There are countries out there that are taking a huge lead in this space. They've got sandboxes, they've got hubs and labs they're actually even working on projects themselves. Canada looking at their own Canadian crypto coin, for example. I think maybe in our space we're following a lead, we're being a little cautious. At the end of the day, the regulators are there to protect us on an everyday level. We just need to be cognizant of that. And I think it's also looking at the technology, it's actually going to solve a lot of problems for them. The idea of transparency, the idea of trust, the idea of provenance that this technology is going to bring is going to create a lot of efficiencies for them and for all institutions at the end of the day, and it's going to enable us to be more strategic and creative thinking as it enables sort of more.
But to come back to the utopia of you, am I right in saying Singapore is moving down the road of all documentation, all records going onto the blockchain?
Yeah, there's a few countries around the world, so particularly in the Middle East, they're very, very active in looking at everything from governmental departments, and even countries like Estonia are with relatively small population, are doing a lot of advances in the blockchain space. What's interesting with what's happening in Singapore, they've got a project called Project Ubin that's going, and that there the central bank is specifically looking at how the Singaporean dollar can be put onto the blockchain and as an asset, and then how settlement would take place, particularly in the space of corporate bonds. Of government bonds in that area, which is very advanced. And Kelly touched on Canada. Canada was one of the first countries to specifically look at that, and I think a lot of the lessons learned from Canada, the Singaporean government is now applying to.
We'll come to cryptocurrencies and Bitcoin and Ethereum in a moment. But before we do, I just need to make sure, sorry, the guys at the back end, give my shoulder to you, just make sure that everyone is happy and is on board and understands what blockchain is before we make the next leap. Everyone happy with where they are? Any questions about what is blockchain? Right, okay, then let's get to crypto. Oh, I'm sorry, I beg your pardon.
I've got one question, okay? In terms of blockchain, I understand how it works in the financial markets, okay? But just start me if I'm going off track. How does it work in the property market where they enter? And
that is neither a liability nor equity. So it's not debt, it's not equity. But that it has some utility where it's a token of value that can be transferred across the world, across our species, infinitely more efficiently than any other form of value that we've ever had. So that is something that is tremendous. So it says, A, does value need to be backed by a government? And it's proving that that's not the case. And B, it's saying the way that we've thought about value and its transfer up until now is being completely flipped on its head, and we're opening up new avenues of possibility for us.
And designed, Bitcoin, designed specifically not to be regulated.
That wasn't its intention.
Yeah, it wasn't the intention.
Yeah. So again, I'll also say this. If you haven't read the Bitcoin white paper, it's about 9 pages long, it's not very long. Read the first few paragraphs of it. And this personage of Satoshi Nakamoto that came up with all of this, in their first couple of paragraphs just said, why is it in this society, when we're so advanced in so many realms, that our financial system still we require 5 days to go cross-border, etc., and we have to rely on trusted intermediaries? Isn't there a better way? And so he proposed this for it. It wasn't about getting around regulators or illicit drug flows, etc. It's just about a better way of doing things.
Creating efficiencies.
Yeah, it has done that.
Well, for the people who use it, definitely. I mean, there are lots of merchants online who accept Bitcoin and you can pay with Bitcoin. There are lots of different exchanges out there with wallets. You can buy your own Bitcoin. South Africa has a few different exchanges. You can exchange it to other Bitcoin or cryptocurrency wallets in different parts of the world, where you can buy other cryptocurrencies like Ether and Ripple. And there are a lot of efficiencies created by that, but you also have a few people who are sitting in the anarchy table who have taken Bitcoin and say, no regulations, I'm an anarchist, I don't believe in government, this gives us free power and authority to control our monetary flows where we want it to. But as Fazan pointed out, that wasn't initially the goal. It was just more about saying, there's the technology out there and our thinking is there in order to improve the system. And that's essentially what this technology can offer is it's an improvement. There's a lot of resistance to it and a lot of concern about it, but meanwhile it's actually going to solve a lot of issues for us in the banking space especially.
Like what?
From a payments perspective right now, if you take international payments for example, if you don't have a relationship with the beneficiary's bank right on the other end, it can go through a number of banks throughout that whole entire process. I only know between myself and that one bank. And as it continues, more fees are taken off. So it becomes more and more expensive and more laborious. With distributed ledger or cryptocurrencies, it's instantaneous, and you can see exactly where it's gone. So it's a lot more efficient, it's a lot more quick, and a lot more transparent.
Goodbye, Swift. Goodbye, Swift. Yeah. 1, 2.